Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a young and well-accomplished professional and entrepreneur from India, Mr. Shiv Parekh. Shiv, welcome to the show.
Hi, Ashutosh. Thanks a lot. Great to be on this show.
Thank you. Shiv is the founder and chief executive officer of hBits. He has worked earlier with Citi and the Stanford Management Company, and he's been recognized by both Forbes and Business World amongst the 30 under 30. So Shiv, before we talk about hBits, tell me about your journey in brief, and how has your background in engineering and your business school from Harvard influenced your approach to real estate?
Yeah, I think I studied engineering physics at Stanford, which was an amazing course. And just to talk a little bit about why I took that course, it was pure passion and pure interest. I was always mathematically inclined, so wanted to do something in that vein. And I thought, why not learn more about physics? Theoretical physics was something that I was extremely interested in, and with an engineering flavor as well. I think how that has, and the idea was never from a perspective of what will I do next in my career. It was just pure interest. But I think the ability to think analytically, using logic, I think that is applicable and transferable anywhere. Right? Any problem solving, any business problem, whether it's real estate, which I'm into right now. But to be honest, I think it would be transferable into any business in any industry.
Absolutely.
My experience at Harvard was completely different. It was an MBA course. And that's obviously much more broader, much more holistic, and much more tied into day-to-day business. Although I will say though, entrepreneurship is very different to what you learn in the classroom.
Right.
Although the beauty of Harvard is that you learn from your classmates, not just your professor. It's the case method where probably for 80% of the time, it's more the other students who've come from varied backgrounds, whether it's, varied backgrounds in terms of age, experience, geography, who are talking, then you're learning from the professor itself. So that's kind of a little bit about my true experiences.
Well said, well said. So let's talk about hBits. Tell me a little bit about hBits. What do you do? And how do you differentiate yourself from other real estate investment platforms?
So yeah, see, at hBits, we're looking to democratize access to real estate. So with a much small, and the idea was the same way one can own a share in, say, a Tata or a Reliance stock. Why can't one own a share in a property, and really to create the stock market for real estate? That's kind of the vision and the mission. And in fact, recently, SEBI has started regulating the space as an SM REIT, or a small and medium REIT, as they call it, notified on March 8th. So that's kind of the vision, to get access to real estate at a much smaller ticket size, because otherwise on a full building, you pay hundreds or thousands of crores, or even a floor of a building in the tens of crores.
Right.
But with the new regulation, you can own this asset class as an investment at, say, starting at 10 lakh. And this is a very attractive asset class to own, because one gets 8 to 9% rental yield that's backed by long-term contracts with MNC kind of tenants. And along with appreciation, you can make a 15% IRR with minimum downside risk.
Right.
To answer your other question, how are we different to other investment platforms? So firstly, in this model, there are only a couple of other sizable players in the market. So they're not too many, because there are high barriers to entry to get in terms of the kind of skill sets that you have. And then I think we'd like to pride ourselves on our real estate capability and ability, given that I come from a real estate background, and I can talk about that. We are extremely particular in terms of, our sourcing assets, our diligence of assets, our ability to lease assets, and our ability to exit assets to give the best returns to our investors.
Interesting. And you just mentioned you come from a real estate background.
Yes.
Tell me a little more about that.
So my father's been into commercial real estate development for the last 35 years.
Okay.
So he's kind of developed buildings, leased it out to these tenants. And obviously I've worked a little bit with him. So I have some flair and some understanding of that market and ecosystem.
So Shiv, the question that I often have when it comes to fractional ownership of real estate is that who is the market maker, and how does a small investor, say of 10 lakh rupees, who invests with you, what is the process for him or her to make the investment, and how do they exit?
Yes, so I can talk a little bit about the process today and the process once the SEBI regulation we
Right.
apply and list the first property. So as of today, every asset is in a separate private limited entity, and investors get shares and CCDs, compulsory convertible debentures, in that private limited company as per the amount they've invested. And then monthly basis rent flows into the private limited company and is paid into the investor's bank account. Similarly, with SEBI, it's going to be a listed trust. Investors will get units in the trust, and different units will represent different schemes or different properties again. So the real beauty is that people can still pick and choose which asset they're investing in. So that's kind of the broad structure, pre-SEBI and post-SEBI. And post-SEBI, the way it works is it's effectively like an IPO process, a book building IPO process for investors to subscribe to the properties. How do investors exit? There are two ways. One is investors can sell their shares or now their units with SEBI, which will be listed at any point in time that they want. Obviously, we have a universe of almost 1 lakh users on our platform, which they can trade into. Or in 4 to 5 to 7 years, we look to exit the full property and give the appreciated returns to the investors.
Fascinating. So my next question, Shiv, is what are some of the key factors you consider when selecting a grade A commercial property for investment?
Yeah, I think that's the most important question, I'll say, for our investors, and we pay a lot of attention to that. So some of the factors, and obviously it's not exhaustive, but some of the factors are building quality. That's extremely important. Building location, and there are two parts of location. One is in which neighborhood or micro market the building is in, and then number two is in that micro market, how is the building located? Then there's the tenant quality, right? So good creditworthiness of the tenant. There's the leave and license agreement or lease agreement between the tenant and the property owner, and that has to be extremely secure and safe. And then we look at the rental and make sure the rental is below the market average. We look at the capital value and try and make sure that's below the below the market capital value. So broadly, obviously there's more nuances, but these are some of the very important parameters that we look to check before bringing it onto our platform.
Very interesting. Thank you. And Shiv, how do you ensure transparency and trust for investors participating in fractional ownership?
Yeah, I think that's extremely important. We try and offer that at each and every stage of investment, right? For instance, pre-investment, every kind of detail that we have of the property is presented to the investor, right? So how we analyze the building quality, what we think of the tenant profile, in the leave and license agreement, what are the major clauses? And in fact, the leave and license agreement itself is available on the dashboard for investors to see. The title report is available on the platform for investors to see. There are photos, video walkthroughs of the property. So any detail that an investment committee of, say, a Blackstone would need, that kind of detail is provided to the investor, the retail investor. Post-transaction, there are regular updates on an investor's dashboard as to the ongoings of the property. We provide annual valuation reports. Again, so there's constant feedback, constant transparency with the investor. So through that transparency and through data that we have, so for instance, we look at each and every sale and leave and license transaction in that market and provide that to the investor to allow benchmarking, to show them the benchmarking as to what price we've picked up the asset at. So that's how we kind of show the transparency to the investor.
Well said. You mentioned about the whole process of democratizing access to real estate. Can you give me an example of how the impact of hBits has been able to democratize access to premium real estate assets or investments for the small investor?
No, so for instance, right, I mean, I can just look at any one of our assets. Right, say our asset in Andheri that's rented out to ICICI Bank. Now that asset was a 25 crore asset. So before this model, on one hand, the seller of the asset could only sell it to someone who had 25 crore, which would be an ultra HNI investor. But now with this model, we have investors who put in 25 lakh, 50 lakh, 20 lakh to own shares in this office unit that's rented out to ICICI Bank, and that's creating value on two sides. One is for the seller of the asset, which is predominantly either developers or past investors. So for a developer, they are getting a very, good exit option for them to take their capital out and redeploy it and bringing liquidity into the real estate market. And number two, it's for a very attractive asset class. It's giving investors access at a much smaller ticket size. And now, like I said, with SEBI coming into the picture through the SM REIT regulation, they've reduced the ticket size to 10 lakh. And I think they've also suggested that as trust is built in this industry, that 10 lakh can be reduced even further down.
Wow. Okay. So my next question, Shiv, is that for any real estate, portfolio that you're going to be renting out, there are two aspects of it. One is the rental yield that you're getting, and one is the capital appreciation that you get.
Absolutely.
Now, while the rental yield is relatively stable,
correct.
Example of the building that you gave, which has been given to a big bank, the exit value of the asset
Yes.
could fluctuate dramatically.
Right.
I mean, right now, it's booming, and therefore there's an upside, but there could be a real estate crash, as has happened in some countries around the world. How do you help to mitigate risk for an investor on both these aspects?
Yeah. So two aspects, right? Rental yield and capital appreciation. So I'll answer both those. First, on the rental yield side, right? One, we ensure the tenant is creditworthy.
Correct.
So, one tenant we have ICICI Bank, other tenant we have is Toyota. So those are the kind of tenants that we have. Generally, MNCs or large listed Indian companies is what we look at. Number two, we look at the lock-in and the length of the leave-in license agreement with the tenant and that property. Number three, we look at the rationale for the tenant being in that location. Is it the head office? Have they been there for 10 years, 15 years? Are they looking to relocate? Is that tenant expanding in India? Or is a lot of these subjective related questions for the tenant's occupancy in that property? Number four, has a tenant done the CapEx to fit out the property? Because then they're even more invested in that property. And number five, the rental. If the rental is below the market, then I know that even if the tenant leaves, I'll be able to release the property relatively easily. And there's good notice, the notice period and the security deposit as well.
Sure.
That's ensuring the stickiness of the rental. Number two, coming to the capital value and the appreciation. So, while in foreign markets, there has been fluctuation in real estate prices. In India, what we've seen, though, historically, and I think that's because of the demography, because of a growing economy, and more so in residential real estate, there have been more fluctuations. But in commercial real estate, because your end occupier is a renter, it really tracks inflation, because it's much more systematic industry, the office market, than the residential market, which does have boom and bust.
Right.
The other part is, again, we look at the capital value and ensure it's below the market average. And also, there's no leverage or there's no debt on any of these properties. So worst case scenario, if the market is bad, real estate is always cyclical. You hold on to your asset for a year or so more. So the cycle changes and then you're able to exit at a good value. But ultimately, yes, the entry price point becomes extremely important. The price at which you get in, which is why we're very selective on that price.
Well said.
Yes.
There's also a question that I wanted to ask you on technology. And there's been a lot of discussion for several years on how blockchain could actually make a significant difference in the way properties are owned in our country.
Right.
Because of just the transparency that a blockchain can provide. My question is, how do you see blockchain or other emerging technologies influencing the future of fractional ownership?
See, I think, so I'd say there are two larger buckets of technology. One is blockchain and the other is, say, machine learning and AI. I think blockchain could play a significant role. And the role would be, I think, in streamlining the title of the property, and especially if you can fractionalize on the blockchain the title, then it would play a significant impact in the ease of transferability of the property,
Right.
and the speed and the diligence that is not required if it's on the blockchain.
Mm.
However, the blockchain part, for that to be successful, there is government and regulatory support required. It cannot be done without the government oversight and blessing. Because if any platform just builds a tool on their own, and a transfer happens on it, no one would want to make that transfer, because if the government is not saying it's a valid transfer, then it doesn't make sense. So you do need government or regulatory support for that to be successful in India, or in any market for that matter.
Right.
Number two, on the machine learning part, we're trying to create the stock market for real estate, right? So what do you need in a stock market or any market? You need information. What does machine learning provide you? One is, in India, each and every sale and leave-in license transaction is public information. You can download it from state government websites. So in fact, what we are working on right now is mapping out each and every transaction, creating a map, a live map of every transaction that's happened. So that's number one. Number two, you also have access to supply, because again, the approval stage of each and every product is public information through, again, state government websites. If you can map historical demand and future supply, this information then gives you an insight into future demand and future pricing of assets. So you're really able to predict in which way prices are going to move. And that allows one to make better investment decisions in the property. And it prevents, again, the cycles that are traditionally present in the real estate industry because of lack of information. So that, creation of transparency, predictability, lends itself to much more investment into this industry.
Well said. You, a few minutes back, were telling me about how SEBI is now, decided to regulate this whole process. I wanted to ask you that, given the forthcoming regulatory landscape that is coming up for fractional ownership, how will an hBits investor benefit from this kind of regulation? What will it do for the investor?
Yeah. I think number one, the investor will get the comfort that it's now regulated by SEBI. If anything goes wrong, which I don't think it will with us, but they have SEBI there. Number two, given that it's listed, we envision the liquidity increasing further, the transparency, the liquidity of the units that investors own. So the speed of exit will become much quicker. Number three, the operational efficiency will increase. The shares will be in demat. It's an established framework. So in that sense, it's much more systematic and transparent for the investor. There are certain disclosure norms that SEBI's prescribed, which anyways we disclose anyways, but the investor will get the comfort that, okay, this is SEBI mandated. So, I'm comfortable in this investment. So I think these are a few of the things that will create much more investor trust and allow the industry to scale as well.
Well said. Well said. So I have time for two more questions for you, Shiv. My next question is, what are some of the environmental and sustainability considerations that you keep in your mind when you make an investment decision?
Right. So we try, and to be honest, we look at assets and we endeavor to look at assets that are ESG compliant, or they're gold certified, or gold LEED certified, or platinum LEED certified. So these are few of the norms that we look to fulfill. I think in this industry, in the commercial real estate industry, though, a lot of the push is coming from the tenants themselves or the occupiers of the property themselves.
Right.
So really, if you have, say, an ICICI Bank, a Toyota, or a tenant could be like a Deloitte or an Accenture occupying the property, and they themselves, these large corporates, have their mandates to only acquire environmentally compliant buildings, then to a degree you're assured that in the assets that you pick up, because these tenants have anyways done their due diligence, you're able to pick up an environmentally compliant building. And I think that's important from an investor perspective as well, because only if a building has environmental compliance is it future proof in terms of an investment, right? Only you see tenants will, because the compliance norms required from an environmental perspective is just going to increase as time goes on. So the buildings need to be future-proof, or the assets need to be future-proof for an investor to make his or her return.
Well said. And my last question to you, Shiv, what trends are you seeing for the commercial real estate market in the next few years?
Right. I think, just overall commercial real estate in India has been driven by the outsourcing market. Right. It started in the late 90s, the Infosys, back office, call centers of the world. So number one, real estate in India has always been driven by global occupiers. I think what's changing is that India is not only now the back office of the world, it's also becoming the front office of the world.
Okay.
So higher and higher value add services are now moving to India because of our level of talent in the country that's increasing further and further.
Right.
So this whole GCC, Global Capability Center trend. So a lot of jobs are moving to India. And in fact, COVID, in a sense, helped the office market in India, surprisingly and counterintuitively. Because as say an American corporation realized that its employees can work from home, then why can't its employees just work from India?
Correct.
Right. So that trend has picked up. Another thing driving the real estate market, or that has driven the real estate market in India, commercial real estate market in India in the last 10 years, has been the rupee depreciation. Because dollar, say 10 years ago or so, was 40 rupees. Now it's about 80 rupees. So for an American company, the real estate, while the rents have risen, the rupees also depreciated. So for them, on a dollar per square foot basis, it stayed the same.
Correct.
And while for other industries, maybe that doesn't help our economy, from a real estate perspective, the depreciation tends to help, and as India, that's expected to continue. So these are few of the trends I see going forward in the commercial real estate space.
Well said. Shiv, on that note, I just want to say thank you so much for speaking to me about your own journey. Thank you for speaking to me at such length about hBits, about fractional ownership, about how the small investor can now actually be able to play a role in the upside of commercial real estate, which hitherto was not really possible because of the ticket size being very, very large. Thank you also for talking to me about technology that you're using and that likely to change, as well as your own perspectives of the whole concept of commercial real estate and fractional ownership. Thank you for speaking to me, and good luck to you.
Thank you, Ashutosh. Great being here.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.